Try heading out to the general public and go questioning them if they've ever heard about cryptocurrency. If they reply with a yes, ask them the names of the ones they know, and you will be amazed to see the names they come up with. The first one will definitely be Bitcoin, being one of the first and the new concepts back then. It will then be followed by one that is much newer and younger to Bitcoin, which is Dogecoin. The reason for that is the intense support it's been gaining from some of the big names in this world. We are also certain that if you ask them about why they know or have heard about the cryptocurrency, the answer to that will be Elon Musk. This is why we call them big names. Welcome to Facts. We create videos about finance, cryptocurrency, CFD, and other interesting investment topics. So, with no more delays, let us start on with this topic. As you must have already read the title, we will be speaking a lot about risk management in this video. Even though we're seeing such a massive spike for Dogecoin, history suggests that such spikes are often followed by a downfall. We wish our viewers to stay safe from such falls, and therefore we request you to watch this video till the end to avoid any sorts of sufferings through these needless risks. However, before we speak about that, allow us to enlighten you about a few updates about Dogecoin that will be crucial in the manner in which it will perform in the coming days. The current price of Dogecoin is $0.72. This means that Dogecoin is at more than 11,000% higher rate than it was when this year started. Even in the 24-hour charts, you will notice a huge vertical climb in the prices. Even though many would call it the volatility in the market, we think this is a good indication for the cryptocurrency. Dogecoin is currently at number 4 according to coinmarketcap.com and has a market cap of $92 billion, which is just around $4 billion behind the next coin on the list, that is Binance Coin, with the symbol BNB. The market cap of Dogecoin will increase even further when it touches the $1 mark. Even though we'll be hopping over Binance, we still have a long way to go before we next reach Ethereum. Before getting into a deeper analysis, allow us to inform you that we are not financial advisors, and this video is only for entertainment purposes. And also, make sure you hit a like to this video, and also subscribe to this channel if you want to stick around. The market here is extremely volatile, so the first advice we'd give you generally is to invest only the amount you can afford to lose. The 24-hour change in the percentage for Dogecoin currently is near about 17% in the green, and it has been green for quite a while now. The trend being depicted by the chart is a bit weird when you look at it. The charts go vertically up, pull back a bit and stay there flat for a while before shooting back up again. Even though many would call this to be a good thing, we believe that there are a lot of risks involved in the current trend. This is the reason why we came up with this video. We may be able to see some additional support levels through these trends, but we do not think that these supports will be strong enough to be able to hold up a key fall that could happen after a rally of such nature. If the current trend continues, it will not be a long time before we see Dogecoin hitting the $1 mark. However, as soon as it hits following the pattern, we will see a pullback which will be quite substantial, and this will be followed by a small period of stability before starting to rally up for the next shoot. Going by the history again, we will see that the charts that look like how Dogecoin's chart looks at the moment, we do not see much sustainability in the long run. It is for a certain fact that we will see the prices going down once we reach the end of this rally. This means that as long as we have this going on in the charts, we will see a lot of profits for the investors. However, as soon as it starts consolidating, the alternatives, including the risk-evading techniques that we will be speaking about today, will certainly come in handy. As far as the current dates are concerned, the chances are that the fallout we've been speaking about will not happen anytime soon. By that, we mean that we have sufficient time before we see the prices of Dogecoin falling down due to the unsustainable growth we've noticed in the past few weeks. The reason for that is the support that it has been and will be getting in the near future. One such event that has the potential to boost up the prices is Saturday Night Live, which will see Elon Musk, aka the unofficial CEO of Dogecoin, as the host this time. Given the fact that he loves jokes, this event has been the perfect platform for him to speak about Dogecoin and at the same time crack some jokes to laugh about. The prices of Dogecoin have therefore seen a major plunge into the air as Elon Musk confirmed the same, and was also spotted rehearsing for it. The charts will continue to turn riskier, and therefore the strategy to manage the risk that we'll be making has to be strong enough to be able to manage all the risk that the Dogecoin will have to survive through. Before we move in further, be sure to drop a like and subscribe to our channel. Risk management is essential now, as you will see. What we need to ensure is that we must be able to manage the fall, and we need to look at all the possible events. The first thing that could happen is that we could fall back to the level from where the vertical climb started. In this case, according to the charts, it must be somewhere around 7 to 9 cents. This means that this could possibly be the worst fall that we could see. Given the fact that the prices have been pretty much stable before that climb, we should be able to stay back and float somewhere around the said mark. In case you got into the market right when we saw the prices going up, that is somewhere around the 7 cents mark, the profit that you'll make by the time we touch the $1 mark will be more than 1,400%. This means that you, in that case, will be at the lowest risk compared to those who got in later in April. Being at the top of the cliff of climb in the charts will mean that you need to stay more vigilant, and you will have to invest on a shorter term basis to avoid the losses due to the current unsustainability. This will help you stay afloat and keep you earning a bit of profit each time you make a transaction. For the other people, therefore, this is the first thing that we need to manage. Assuming that we're all well aware of the tips for investment provided by Warren Buffett and Peter Lynch back in time, both of them did mention one step, that is, invest the amount you can afford to lose. For the people who followed this drop will not mean much of a loss, and they will stand a chance to recover back much easier. If we fall from the current levels to the previous all-time highs, we will see somewhere around 25% of a fall in prices. However, since we also said that we do not think that we'll be having the said drop anytime soon till we touch the $1 mark, the effective drop at that point will be somewhere around 85%. In case you missed all the points of entry and are certain that the price of this coin will go further up than where we're at right now, make sure that you make that entry with a comparatively smaller amount. This will help you bounce back when we see the next climb, as you won't lose a lot of money in case the prices go down. At the same time, you will continue making profits through the small amount you invested while the risk was higher. If the amount you invested at such high points of the cliff is higher, it will multiply the risk that already is associated with the current chart. Therefore, the two things that must be followed are to invest a smaller amount, and the amount you invest must be the amount you can afford to lose. Being something that is based on pure humane factors, the prices will continue to remain unstable. The best thing anyone could do is mitigating the risk by deploying any one of the methods we mentioned here. The fact that we will see a rejection at the $1 level or right above or below it is not at all doubtful. Therefore, what we need to do is prepare for the fall and make sure you turn this unsustainability into an opportunity. In the meantime, keep in mind the rejection that we saw in Bitcoin in 2017, just before the $20,000 mark. We hope you liked this video and have taken a lot from it back home. Make sure you hit the like button to let us know, and also subscribe to this channel to stay on top of your portfolio. Till the time we come up with another informational video for your entertainment, keep looking out for the best opportunities and do your due diligence before jumping into any market.